Welcome to this meeting of the Lincolnshire Local Pension Board. It is a very warm afternoon. It's a very warm room. Credit will be given to those presenting reports for PIP. Yes, you have been warned. Right, apologies for absence.
Thank you, gentlemen. We have apologies from Debbie Holland, Vicky Sharp, and Sherry Gilchrist.
Yeah. Declarations of interest, if there are any.
I'm a pensioner member and daughter's is a contributing member.
Thank you. Right, minutes of the previous meeting. Are those a true and fair view of what occurred? Board member who was there, please assist you.
Yep, that's the one.
Are we agreed?
Yes.
Right, moving on to main business. Board appointments, Joe.
Yes, thank you, Chairman. So this paper updates the board on the recent appointments. As you're aware, it was agreed at the March meeting that 2 new members should be appointed to improve resilience to the board. In addition to this, the current terms of Councillor Mark Whittington and Dave Vickers came to an end. So this paper just sets out the recruitment process and outcomes for the changes to board membership. Unfortunately, all good plans don't work, but the new employer reps are unable to attend today. Vicky Sharp and Debbie Holland both had leave booked ahead of being appointed, and unfortunately Sherry Gilchrist is unable to attend due to being poorly. So that was all I was going to say, but I'll happily take any questions. Thank you.
No, we happen to know that report. Okay, thank you. So pension fund update, Joe.
So this is the standard quarterly update paper. I'll just go through the key points very quickly. So section 1 updates the board on any breaches that have happened, and the breaches over the year shown in Appendix A. There weren't any material breaches, so there is a keeping that has been reported to the pensions regulator. One change in the risk register that's shown in section 2 on page 16, in the risk of the reduction of the overall knowledge of the committee, where the direction of travel we've been able to move to improving. All new members of the committee have completed the initial training, so that's very positive. Section 3 updates the board on activity with Border to Coast and partner funds. The last joint committee was held yesterday, and I shared papers with the board last week. Section 4 on page 18 provides the outturn statement for the 24-25 budget, with an underspend of 0.8 million. This is mainly due to lower investment manager performance fees than we assumed. And section 5 on page 20 explains the discretion exercised by the fund to delay including the McLeod data into this year's annual benefit statement for the reasons that are set out in paragraph 5.5. And then finally, section 6 provides members with an opportunity for any comments or questions on the papers that were brought to the Pensions Committee held earlier today. So I'll happily take any questions.
Okay.
No.
So I had a couple, Joe. In terms of the change to the risk register, there's a logic to what you're doing, but I suppose my question is, have you done a baseline assessment of the knowledge and understanding of new members, so you know what you're building on?
No, we haven't. We have spoken to them though, and I think 1 or 2, they're coming from not particularly knowing the LGPS or the pension fund at all. Obviously, we benefited from the fact that our chairman is a trustee at a private sector scheme, and one of the committee members was the leader of the council for 20 years and historically was chair of the pensions committee as well. But other than that, no, we haven't done we don't particularly want to scare them off, I think would be the reasoning behind that. Having had a member that has resigned from the committee before when they were assessed, it's a very real thing that can happen. So we know some have already started the Lola training. So what we will do once they've had that initial 12 months is then look at doing an assessment to see, given a year on the committee, where are we?
So you're going to go through something like national knowledge assessment. So
Something like that. I'm not necessarily a huge fan of the national knowledge assessment, having done it once before. I don't know that it reflects that true picture, because it's people's assumptions and people either underassume or overassume sometimes. But we will look at what is the best way
you'll have
assess. Yeah.
So the other question I had was about the McLaren decision. Again, it's more about process than the decision itself. My reading of the regulations is that decision should be taken by the committee.
Yeah, the difficulty has been in the timing of it. So it was discussed at the March meeting as to what our expectations were. And then obviously we didn't have an April meeting or a June meeting, and we had to make the decision quite promptly to be able to get the annual benefit process started. So the decision has been made as head of the fund and then communicated to the committee.
Okay, so
We didn't have a chairman for the period of time.
no, I appreciate there are some practical difficulties, but I'm just wondering. Am I obligated to say this is a breach? Probably not. But I think maybe you might want to agree with the chairman a form of words in the minutes of this morning's meeting that indicate approval by the committee. So you've sort of completed the circle.
Yeah, in retrospect. In retrospect, yes. Chairman's happy with that.
It just sort of covers up all your bases.
Okay, thank you.
At risk. Can't see you, Peter. You're hiding behind that.
So,
Okay.
falling asleep. So it's just working me out.
Right. That pensions administration update.
Right, thank you. Just working that out. So this is the West Yorkshire report from 1st of January to 31st of March 2025. To keep it short, key performance indicators, broadly, we're hitting our targets. There are some that have failed that we've identified. We've shown you the reasons, justifiable reasons. Most of them we would expect with the linkings and the transfers have had historic problems nationally, not just within Lincolnshire or West Yorkshire. The death ones are important to us because they're priority ones and they're relevant obviously to beneficiary payments. Just there's one of them missed just by one case. We are aware of those. We are looking at even reviewing the processes, so bear with us on those. Some of the other points to look at, if I jump forward to IDRPs, there aren't many IDRPs, which is great. The one to the 18th of February 25, recovery of overpayment, pension due to re-employment. In other words, it should have been abated. The pension was overpaid. We've looked into it. It was actually an error of the previous administrator, which makes this quite old. Because of that, the case has partially been upheld and the member has been compensated for stress, etc. Okay, but there is still a payment that is due. We took a while to deliberate this because of the nature and the age of it, but we did send a holding letter on the 10th of April to meeting our statutory deadlines, and we formalised this on the 1st of May.
Before you move on,
Yeah.
the other IDRP.
Yeah.
Is that, is,
January.
is that actually an appeal? Aren't they asking for something that isn't allowed in the regulations? So it's,
Well, that's why it's a discretion. So this is about payment of a child's pension to a grandson. Now, I suppose the first glance at that, you go, the grandson isn't entitled to anything. However, imagine if granddad or your grandmum is the financial, what's the word I'm looking for? Guardian. Perhaps this grandson went to a private school and grandfather or grandmother's pension paid for those fees. So there would be a direct dependency on our member, even though that it's a grandfather and grandson relationship. That discretion could be exercised. Now, I've come across one case like that in my time, in 20 odd years. So I don't know the details of this case, and I'm more than happy to go and look at it.
that's fine. I mean, so that effectively the appeal is about the failure fund to exercise the discretion.
That's right.
Right, okay.
But we've looked into that and we believe the discretion has been exercised correctly because there is no financial dependency grandson.
I think this one actually was discussed because the IDRPs against the fund go out in my name. So I do see them. And yeah, this was one where there wasn't any financial dependency on the grandparents for the grandchild. There was no proof. No, there wasn't. So, but all of these things do come through me.
Okay, it's quite an unusual one, so yes, it sort of raises the question when you see it. Okay, thank you.
The pension ombudsman cases are ones that I brought before. So we're just waiting on the pension ombudsman to update us on those.
Sorry, Matt, can I?
You can go back to those.
Would you mind me just coming in on that? I'm still a bit concerned. These are 3 years old.
Yep.
Aren't they? I know they've talked about this in the previous meetings, but just remind me, is the members or are the members aware that it's not us, if you want to call it, it's not Lincolnshire pensions, it is ombudsman related. They are, and they are still waiting for an outcome.
They are. And it was earlier this year that we did contact the ombudsman to say, you know, how long are we going to wait? And not just on these cases, but generally. And we have since then seen a trickle of responses come through. But it is 18 months to 2 years, I would say, as an average. It's a bit frustrating for our members. I don't know how the other officers feel, but I mean, we are under strict deadlines to produce IDRPs. Whether in favour or against the member, and then move it on to the ombudsman. It does seem a little bit unfair that it's whenever they get round to it. Even though they've had a cyber attack and everything else, we appreciate that slows things down, and that was awful. But that now was 2023, I think. So there's nothing that I'm aware of that we can do to chase this up. But we have asked.
We have. And the members, the 2 members are mindful that it's being held up.
Yeah, and they're not chasing, to the best of my knowledge, they're not complaining. They understand it's with the ombudsman and they're waiting for that help.
Okay. Thank you.
Would you complain to about an ombudsman?
On the finance report, I should just draw your attention to the tables in 5.2 and 5.4. They are slightly incorrect by 2p, but the figures, the data that's in 5.3 are correct, and you get a new set of figures to the board. Policy changes we discussed this morning. George mentioned the temporary bank accounts. I think this is a good result. I looked at this nearly 4 years ago and said to West Yorkshire, why? George came in 6 months or a year ago, and looked at these on our reports and said, why? Because we are an outlier. The reason that we had the temporary bank accounts, to remind the board, was to assist our members, those that reached the normal pension age, yet didn't claim their pension. if that was remained unclaimed past their 75th birthday with additional taxation. So we felt we could discharge the liabilities, hold the money. If they walked out some years later, we would pay them their pension and they wouldn't have the additional tax. Very nice of us. And as for the 5-year refunds, there was some clarity, needed, shall we say, on whether they must be paid within the 5 years stated in the regulations or could be deferred past that. So again, we deferred or we exercised the right, paid it into account, effectively paying the refund within the 5 years. We don't believe now, having taken legal advice, that I agree with this, that it actually discharged the fund's liability. That money still remains within industry pension funds, and we will now cease creation of new accounts for pensioners, and for the refunds, the regulations are about to be changed, adjusting or removing that 5-year stipulation. So again, no need for the 5-year rule. So I'm really pleased with that, to be honest.
So what are we going to do about the ones that exist? Are we going to close them and transfer the money back into the fund?
That is my preferred option, and I think we can do that. What I'm saying internally at West Yorkshire is that we must proceed with caution. The reason for that is we have instructed HMRC that a member has or is receiving a pension and tax has been paid. In fact, some codes have been adjusted post-retirement because HMRC are aware of income elsewhere or benefits, etc. So we can't just take that money and plonk it back into the pension fund and then adjust their record to make it a deferred benefit again. That's ultimately what we do. But I think there's some steps that we need to do to make sure that there is no repercussions with HMRC.
So HMRC are deducting tax from other income that these people are receiving, and we can't trace these people and pay them a pension.
Well, let's clarify that a little bit. Some we can't trace, but some
They'll refuse to take it.
Yes. I think the most concerning one, and I think it is a Lincolnshire one, is the member suffers from anxiety. And I know we can have a very good conversation with her daughter. She says, I know she should claim a pension. I tell her all the time. That lady will not enter a conversation with us, even via her daughter, so that those benefits can be paid. And that's just probably an extreme example. That pension being paid into their accounts now going to cease, those benefits are going to be made deferred. And I don't know, sitting here, what her tax position is, and will it affect it in a positive or negative way? In some ways, that really isn't our concern. Our concern is that we've dealt with this statutory entitlement in the correct manner. And I think we've tried to be overly nice to scheme members, so they don't have to pay an additional unauthorised tax, should or if they claim their benefits. And I think it was discussed at a committee, so a couple of committees ago, where they actually accepted that the responsibility should lie with the member to claim the benefits. I think there is one other pension fund in the country out of the 86 of this race that does this. So we are a bit of an outlier. But I'm quite glad it's changed. And I will keep you updated on where we go on this. Because I think there has to be a process of how we communicate with HMRC. Does that make sense to it?
Yeah, all that was rational. I mean, as we look at this group, how many have we got? I can't remember.
I haven't produced a report. This time.
I don't know. I was not sure.
I think it's probably 70 odd pensioners and 300 and odds.
Yeah,
the
about
refunds.
500 in total.
What's the future? What does it look like for them? In the sense of, all right, we either can't get them to communicate with us, engage with us, or we can't find them.
Yeah.
Do we at some point in the future just have to say that the money does have to go back into the fund?
Like, that's the ultimate goal, I think.
And just say, right, I don't know, do we do it on an age basis or?
Well, that was one of my first arguments to West Yorkshire Pension Fund on arrival is, when do we stop paying? Pensioners will die. Fact.
Yeah.
When? We don't know. So when do we stop paying the pension if we're not in communication with the scheme member? They could die tomorrow and we could pay it for another quarter century. That was kind of one of the first things that I couldn't square in my mind. So I
Come up with your mortality script.
could do. A lot, it really could do, but if they were abroad, they might not. So there's always a crack that somebody could fall through, and that would mean that the money's being paid indefinitely and equity isn't right. So that was where my starting point was on this argument for these bank accounts. For your question about, these, so let's say there's 500 accounts there, I think we need to, particularly to pensioners and their tax code, is liaise with HMRC and bring that back in. I don't think it would be appropriate to leave those 500 standing there as an identifiable pot when all the rest of the future benefits not being put into payment are within Lincolnshire's pension fund. Because now you've got a bit of a two-tier system. That can't be right either. So I think they need to come back in. And as for finding them, because of Dashboard, which I'll mention in a minute, we are procuring new tracing agencies. Yeah, and there'll be more mortality screening and stuff like that. So we absolutely expect to be able to get a chunk of these found. Not all of them, but a chunk of them. And that would then resolve that problem, hopefully within the next 12 months, something like that. But I think this isn't the end of the story. There's some more, there's another journey to be had.
Okay. All right. Thank you.
Okay, so next dashboard. I think all I'll say on the dashboard is we are on schedule to go live on the 31st of October, which is great. That's just for public sector pension schemes. It's not for the public. Public sector schemes will be provided with a 6-month notice of when the public will have access to it. Doesn't mean to say that will be on the 1st of September, 6 months later. It could be any time in the autumn or after. So we'll just keep you informed. I think my fear is it might go live around year end, typically. That in itself isn't a concern, but if the numbers of the public expected to make contact are anywhere near what we're estimating, we will have a huge number of emails, phone calls, extra work to do on year end, and we don't know at the moment what that will be. So that, I don't know if that's on a risk register anywhere, but that probably should be. And just to remind me, it's because there's £26 billion nationally that is unclaimed in pensions, so it's not just Lincolnshire, and this is what the government pushes for, people to access their benefits. That backlogs. Sorry,
Yeah.
Is it on the shared service risk register?
it's not clear. Yeah, definitely. I do generally think that's a risk because it's an unknown.
I think that's probably the key place for it as part of the shared services role. I mean, we can.
Yeah. Let's do that then. I'll double check. Just looking at backlogs, the numbers are there.
Before you glossed over the cloud.
I was going to come back to the cloud. Yeah, yes.
All right.
Do you like me to do that? Is that
Yeah.
that's our-
Make sure we do. Yeah.
Right. Okay. Let's do that. So the figures are there. I think there's a couple of points to make. First of all, the automation is making an inroad to the backlogs. There are two things that are slowing down the effectiveness of automation. First of all, of those cases that were in the system created manually, they have to be completed manually because the automation can't go along various steps of the way and pick them up and process them. Secondly, we have to look at the information that we receive, and only if we've got 100% of data can the automation work. So simple things like a lever, we may not have the pension pay. So that's a manual chore. We need to check with the employer, find out where the pay is. Sometimes, believe it or not, we have a lever, but we actually don't get the data they've left. This all sounds a little bit daft, but at the moment, the combination of those types of errors and the cases that are in the system are accounting for about half the work. So they will drop down in numbers over time and the automation will become more effective. And I think the new way that employers are now submitting their monthly data, which means they're responsible for the data to be correct or they can't submit the spreadsheet, will actually sort out the error issues that we're getting in some of these places. Again, we'll keep you reported on that.
You finished on that bit now.
I was just going to go onto the tables and just point out what's gone down. Do you want to come back to it?
Well, just on that, don't the monthly data submissions include there's a number of places you talked about lever forms.
Yeah.
If the fund is getting monthly data submissions, shouldn't that allow lever forms to be replaced? Because all the data that should be on the lever form should be.
That's you think, but no, Lisa, you're more afraid.
Yeah, the monthly returns, the employer will put a date of leaving, so it activates on our record to show that we'll receive our third contributions. But the employer still needs to submit an actual leaving notification, which has been more simplified because the data on the monthly return, but does replace it at the moment.
Talk about the tables then, Matt.
Yeah, back to the tables. All I would say is 5.38, 39 and 40 just demonstrate that the backlogs are falling across the shared service. They're falling across Lincolnshire. And the active process is around 8-9%. And active and pending combined around about 30% since the beginning of the year. So I think the automation has done its job and is doing its job. Plus the fact that we have recruited and resourced to these areas, and I think it's starting to have an effect.
It's on the tables, Matt. They're fine, but I think just for this board, we're only interested in Lincolnshire numbers.
Okay.
What's happening with the London boroughs and West Yorkshire? Is it really of a concern to
That's fine.
exactly right? So, if you want to reduce the volume of report by
Well,
just focusing on the Lincolnshire numbers,
no, it's fine. I mean, we've used them as comparisons just to make sure that, we are equally working on the cheap.
Well, yeah.
That point taken.
Yeah, I think the Lincolnshire progress on Lincolnshire appears to be better than on the others in some areas, and that's good stuff. Really.
There is a consultation out at the moment by MHCMG regarding fairness and access. And you can see from the report there's areas where the regulations are likely to change, including the 5-year refunds. They've also, with this, put a questionnaire about potential administration burden. I think this is quite important, not least because of the top point, addressing survivor pensions and death grants. We are going to be asked to administer retrospectively death grants back to 2005. Sorry, survivor pensions back to 2005 and death grants to 2014. There will be some guidance that will go with the new regulations, but it's a very good question of what would the burden be on the administrator? How do we identify a beneficiary from 2005 and how would we trace them going back to mortality stuff and everything else? And how much work should we put into it? That was a question I asked MHCLG. I very cheekily said, well, we'll change our processes and we'll do it properly going forward and we won't look behind over our shoulders. They weren't very pleased with that, but I was trying to push them as to how much work we should do. So I think we will be responding to those questions because I think it can be quite challenging. Annual benefit statements. The report says 94.7%. Today it's 98.5%. So just under 23,500 have gone out and there's 127 to look at. That's quite normal for outstanding pieces of work. So the production was blocked. Once that piece of work is completed, they will go out shortly. With these annual benefits, though, there is no cloud information. There's a couple of reasons, mostly linked, well, all linked to Civica and our UPM system. We knew we could produce annual benefit statements and produce them in time, as we've demonstrated. The information that we required for the McLeod information, the underpin will show an uplift for certain members to qualify. That was going to be delivered in May. We went, that's a bit close to the deadline, bearing in mind that these must be out by the 31st of August. And it sounds like a few months to do the work. We've got to obviously put all our returns and information onto the records. We need to test the drops. We need to test the calculations. We need to test if we can actually get in on an annual benefit statement. And then we need to run it and distribute it. So we thought that was too close to call. To the best of my knowledge, all Civica clients, it's the same as us, all bar one, I feel I'm all bar one Civica client have done the same and have produced annual benefit statements without the cloud or haven't produced annual benefit statements yet. My decision did seem to be quite a good decision if I inform the board that we have yet to have that drop that would contain that information and it's not expected until August.
Yeah, the first version of it had some ship stopping problems in it.
Yeah, show stopping. The calculation didn't work, George, and there was a further 18 issues. I think.
Yeah.
And as I am a member of the National Pension Officer Group, we do talk to the software providers every quarter. We do ask them about their deliveries. And one of the things that I think we need to tease out, and I think West Yorkshire are going to think about contacting Claire Alcock at LGA, is to let them know that the Civica version of events doesn't align with ours. Civica will say, oh, the last version was delivered in May and it contained X, Y, and Z. That's actually true. What they didn't say is that the version was already 3 months late. It's got 19 errors and our customers don't use it. Because if you listen to what Civica have been saying in the public forum, in LGPS and the fire schemes, it's not quite the same story. So if you have an opinion on that and don't want us to share that, probably it's a good idea to tell us, because I think that's where we're going.
I think that's a perfectly reasonable proposition.
And if I can just say, I have had a call with the board, or she's followed up with some more information about how they're addressing this with Civica, because it's a huge concern that something so critical has had these sort of delays, and it feels like it's not Civica's focus in getting it on and getting it right.
And there's clearly, speaking from day job experience, there are clearly issues of the quality of initial testing. The sort of errors that are coming out when we install the software, West Yorkshire installed the software on site, are things that should have been picked up in any basic QA process. They've got people writing code that it should not get out into the wild.
Yeah, I think there are some significant issues, with knowledge of their own system. And I would say the additional issue with the West Yorkshire version is that we are on an Oracle version. I believe there's only 2 clients, significant clients left on Oracle or on SQL. So the issues that a client will face on SQL, may be resolved, and they might not be, funnily enough. But there's that additional issue when they convert it back to Oracle, they get the coding wrong, and it is some really basic stuff. So they'll get the coding right to do a calculation, but they've duplicated it, so it would just kick everything out and fail. And with the checking, you would have thought somebody would have checked that as it got out. So I don't know really. I'm repeating stuff that I've heard from Elizabeth, etc. But I think the point is these are wider than Lincolnshire and West Yorkshire, and we're going to report and take it forward.
Can I just ask you that? I mean, just from my own perspective, whose responsibility within, you've got West Yorkshire, you've got how many Civica users have you got within?
About 50% of the scheme.
Does each site, so does West Yorkshire, I know Lincolnshire won't because we rely on you, but do you do the testing?
Yeah, we do a huge amount of testing
For them?
Well, for ourselves, because the good thing about the system is that you can change it to suit your own processes. Yeah. So, for example, the annual benefit statements have a current value of 55 and 60 and a state pension age. Yeah.
Right.
The normal offering would be current value of state pension. So we can adapt that annual benefit statement software so that we can give you those different options. So it's some things like that. Yeah. But what we would expect is when the product lands, that it is being tested from their side of the fence.
Yeah.
Yeah.
Well, that's my point, really.
Yeah. Then we should be able to test the basics, and then we should be able to develop and code the rest ourselves. And I think, as George was saying, that the basics aren't always working.
Has it got worse? I mean, what was Civica historically better as a company in delivering a product that was fit for purpose.
Well, and it'd only be my opinion because I've been involved in a couple of procurements. And I did take a county council away from a competitor to Civica. So I would say, yes, in 2013, I thought they were the best software with the best staff available.
Right.
But this is 2025,
Yeah.
and I'm not sure I'd be comfortable to say that anymore.
I only asked that you'd expect the product to be fit for purpose when it was delivered.
Yeah.
And it seems to be progressively not.
I would agree with that. I mean, like us, like the administrators and all the funds, they're having to react to the legislation, and it has been quite poor. That's why we've got the cloud and remedy in the first place, poorly drafted regulations. Having said that, we're able to do manual calculations and get the benefits to the members on time, yet they can't support us with the system that we do the calculations. So my sympathy only goes so far with their development. And other providers, although none of them are perfect, do seem to have moved on in certain areas.
I mean, all I was sorry, Joe, all I was going to say was in my day, I mean, forgive me, it was Haynes who we used. I mean, in my, and I mean, so I never was familiar with Civica, but we still expected from the Haynes days that the product when it was delivered to us and we were buying it as a was fit for. They'd come up with errors. They'd say there's a known error. Just be mindful. But it does seem a bit of a, sorry to say, a little bit disappointing, isn't it, at the moment?
It is, and I know we're going off piece here, but I mean, we are going to convert to SQL over the next 6 to 12 months. So we are going to get onto the most recent version. Right. And then after that, I don't know how much after that, I don't know if it's a year or whatever, there is going to have to be a procurement because we're at that place in our.
I was just going to say that I think it's 26, is it?
I think it is. I think
March 26 or something, the current contract expires. So I know Elizabeth Walls, throwing the name out there, but not said who she is. She's responsible. I don't know, is that head of IT?
she's the head of IT and something. She's
Yes.
yes.
Right.
But we had a really good catch up, and I think it's something that we said we're like going forwards, find out what is happening with that to ensure. I think I did ask the question: is Hayward's not better? So knowing Hayward's when we were with Michelle, but she did say it's a bit swings and roundabouts and at different times. It's a bit like trying to pick a secondary school. It's great when you pick it, and then 5 years down the line, it's all changed. So, but there are other players that are developing things and potentially coming into the market. So, I think there's a lot of kind of discussion going on. And I assume it's not just with West Yorkshire, because I think there's a lot of disquiet about the way
There are
Civica.
some discussions being facilitated. I don't know if West Yorkshire are attending, but there are some discussions being facilitated at a sort of national level. But what does LGPS do about software?
So we're not, all my thoughts were, we're not you're not just sat, they say, back at base saying, well, we just got to put up with it. I mean, you are trying to take.
Some people have temporary bank accounts. I can't still see myself as a bit of an outsider at West Yorkshire, in so much as I look at it differently. I've worked even the Haywood system even 4 years ago with a corporation, and before that, up to 2013 with Essex and then Civica in, as I said. So I can see, you know, how it ebbs and flows when they've got good people, intelligent people, people that want to change the system, and then you can see a system that does basic calculations and systems that doesn't. And you know, Haywood's, because they are probably the main competitor, do have their own problems. So it's not as simple as just getting rid of Civica. They're not good enough anymore. I think the question to Civica is when do they think they would be good enough again? I think that's the question of something like it. But I think if it assures the board, it will be a true procurement in 2026, even though there's been 15 years. 15 years with Civica.
I'll just ask a question. Thanks. So you just mentioned about moving from Oracle to SQL.
Yeah.
That doesn't sound like a 5-minute job.
No.
So the communications around what might mean within customer operations.
You know that.
Yeah, we get a monthly report, and that highlights all projects. So, and we've talked about it at the shared service meeting. So we know this has been happening. It's been planned over a long time period, and we're kept up to date every month with where the latest progression is on that and where there are potential risks or so. Yeah, but we are fully informed of that.
Anything else in that report? Sorry.
So just on the ABSs, you've got in there about Lincolnshire County Council having 577 of the
127 is the update.
so that's gone down because they were hoping to finish them by the 30th. That's full.
full.
So did LCC meet their 13th of June
I
target?
had a look for this CC.
That's fantastic. I know they've put a lot of effort into improving the resourcing in there, so that's really
And the
positive
employment
news.
relations team have made sure. The 127 are across other employees.
Excellent.
Oh,
Thank you.
right.
Sorry, George, I know this is my last question. So can I look your way? If I'm not up to date, forgive me for this. Branding. There's a meeting in July. It's not
20, the 24th, 2 weeks time.
on of our views as a scheme of fund. They're well known, aren't they? What we're asking. That's all right. I just
enough. Just yes.
well, I'm just mindful that come next month there is a gathering of decision makers. If I may just highlight it.
Yeah, no, it's appropriate to highlight it. I know you're quite passionate about it. but-
Yeah, all right, thank you.
We have asked to have been kept informed
Right.
about what is going to the meeting, what the expectations are. Not seen anything yet to know what the direction of travel might be, but they absolutely know, because I've been planning on since 2015 about brand.
I just had to remind you that. Sorry.
No, that's as my predecessor, and that's the more recent. Okay, there are, without wishing to sort of go back to the whole, are there any other points board members have?
Quick one.
On the application?
I've just looked at my pension statement for this year and I thought there would be a disclaimer to say that your figures may be affected by the cloud, but there's nothing on there.
Should be at the bottom on the first page, there should be a little box that says either you become.
Oh, yeah, seeing that now, yeah. I was looking for something a bit bigger, but yeah, that's fine.
No, because it's just to say that we have.
I mean, it won't affect everyone. Will you be telling people that it might?
So there's two different notes on the pension statement. So one says you do come under the cloud remedy and further details will follow. And one says you don't meet the cloud remedy, so there's no update. Statement, that's the figures.
Yeah, I can confirm that because mine says I might be. I think the issue is we don't, for the majority of people, it's not going to impact them. So we don't want people to worry if suddenly there's this big thing about the cloud. And they're like, what on earth is that? Is that going to affect my pension? So for the minority that it might impact, it does say that you'll get further information once it's available.
So, real lifetime.
Could it be for looking?
Just on the ABSs, for those like Kim and Joe who might be affected, when you've got the software working, will you do a further production run and say this replaces?
I don't think so. I don't think that's the intention, because with the discretion of not providing that information is that we must provide it by 2026.
Yeah.
So if you asked, we would. But if there was nothing else, and there's nothing else material we've done on your record, it would be just literally so. Yeah.
Right. Any other questions on Matt's report, colleagues? Okay. We agree that we're noting that. Right. Fits for the future, which I don't feel at the moment.
Thank you, Chairman. So this paper updates the board on the government's response to the Fit for the Future consultation, details of what Auditor Coast is doing to ensure it can meet the requirements of the upcoming pension schemes bill, and the recommendations are: board considers and notes the report and indicates whether there are any issues of concern at this stage which officers should factor into their work to address the government's proposals. So the government proposes to implement its proposals set out in the consultation with very minor amendments. There were, to a lot of the questions, there was a lot of dissent and disagreement. However, the government are pressing forwards with most areas. 3 areas that it covers are pooling, local investments and governance of funds and pools. And details of the changes from the original consultations are set out in paragraphs 2.3 to 2.5. Pension Schemes Bill was introduced to Parliament on the 5th of June and is expected to receive royal assent in 2026. And there'll be additional regulations and guidance to set out more detail. And Section 3 sets out the LGPS elements of the bill. What I wanted to do just for the board's information is highlight what the key changes are to the Pension Committee's role for your area of oversight. So in setting the strategic asset allocation, the line between the committee setting the allocation and board to close implementing it has now been really clearly set. Currently, the committee can decide, for example, in equities, how much in UK, how much in global, whether they like to invest actively or passively, and even which sub-funds they'd like to invest in that the pool offers. That is all changing. There is an asset allocation template that's set out in the response and that was set out in the consultation, which is really at the very highest level, just across equities, bonds, property, etc., which the committee will decide their strategic asset allocation using that template, or if they choose not to use that, it can be a level higher, just their risk return requirements. And Border to Coast will be fully responsible for implementing that across the vehicles that they have. This will mean that the committee have got to be really clear in setting their investment beliefs in the language that they use, so that Border to Coast can actually translate that into how they then invest our assets across the areas that are available. Second thing is that all of our assets will have to be transitioned across the Border to Coast by 1st of April 2026. So that's either full transition or under the management of Border to Coast. Most of the legacy assets will just be under the management of Border to Coast because it's very expensive to actually transfer some of these private markets assets. And it will mean that one of our current managers, Morgan Stanley, will be no more, and those assets will move across under the management of Border to Coast. So from April, they will be responsible for 100% of Lincolnshire's assets. Another change is that the asset pool will be the primary advisor to the fund. So the relationship we currently have with Highlands Robertson as our investment consultant, that will change. And the committee are going to need to consider how they're going to get that independent assurance of the work that Border to Coast are doing. There'll also be a requirement for pension committee members to have the appropriate level of knowledge and skills for their roles at an individual level. So this is the board's requirement now. So the committee is being aligned to the board. It's always been slightly odd in that the board had a higher knowledge requirement than the committee when the committee are the decision makers. So that is changing. The fund will also have to appoint an independent advisor. So this is not the same as the independent investment advisor that we currently have. This is a different role that will look across all the aspects of managing the fund, so that they can assist the committee in providing advice and assistance. The fund will also have to appoint a senior LGPS officer who will have the overall delegated responsibility for the management and administration of the scheme. And this will change some of the current delegations that we have with the committee, and also will need to update the constitution to reflect that. And then the final area to highlight was that the fund will be subject to a triennial governance review. It was suggested it would be biennial in the consultation. However, every 48 funds every year doing a governance review seems quite excessive. So aligning it with the triennial evaluation period. If any funds are found to be failing, then the Secretary of State will have the ability to either involve the pensions regulator or could actually enforce a fund to merge if it feels the government needs governance that needs improvement. In addition to the consultation, all pools also had to make a submission indicating how they would meet all the new capabilities within the timeline set. So that's by end of March next year. And Section 4 sets out Border to Coast approach with more detail attached in Appendix A. And as part of their consolidation plans, government also decided that 2 of the 8 pools, Access, funds in the southeast, and Brunel, funds in the southwest, didn't meet their requirements, didn't believe they could meet their requirements going forward, So the 21 partner funds across those two asset pools will have to find a new home with a different asset pool. And they have a deadline of the 30th of September to express their preferences there. Hopefully talking to the pool to ensure that the pool would like to have them as well. So officers are now working with Border to Coast, and the Joint Committee are also involved on how we take on new partners, along with creating the new capabilities that we need to be able to provide the advisory service, the legacy asset management and the local investment capability that will all be required from the 1st of April next year. So basically a lot of change going on over the next 5 months. 9 months. I just can't count today. So I shall stop and answer any questions.
Colleagues.
Just this is going to be an awful lot of work for Borders to Coast. Are they recruiting extra staff?
So fortuitously, a lot of the things that came out of the consultation Border to Coast were already planned. So as part of the 2030 strategy, it was agreed in July last year. It was already agreed that they would develop an advisory service, that they would develop more on the local investment aspect, and that they would also look at legacy asset management. And it's something that they were building specifically for Lincolnshire as well, because we knew at some point we had to move our private markets across. So I think we've been lucky to have been ahead of the game on that, because it was going to be done. The difference there is it was going to be done on an optional basis of using those services, where it will be mandatory going forwards. So there has already been a lot of work done on that. We've held numerous workshops on initially how the advisory service might work. They have appointed their head of advisory, who started in mid-June.
It started the Monday of the Barnsley 5 week.
Yes. So he's in place, has already spoken with funds, and he's looking at how working with funds, how that service needs to be developed. So the legacy asset management, as part of what they've been looking to design for Lincolnshire, that's assisted that process quite some way along anyway. And then the local investment, there was already some capability there from the staff that trooping across from the underlying funds initially that have done local investment, and working with those funds that currently do local investment anyway. So I think we've been in a fortuitous position with Border to Coast in that these things were already there, but they just have to be ramped up now to meet the government's deadlines.
Okay.
Can I just ask a question that, sure, I know the answer, but in view of the talk this morning at the pension committee about the guarantee of what's being proposed and the prospect of challenge in terms of ownership decision, it's a statutory scheme, like the government scheme, so the rules and all of the benefits and that, no one owns anything really in terms of as a member of the scheme. But there's £3.5 billion worth of investment. Who actually owns that 3.5 billion? Where does it sit? I mean, are we a custodian, or who is the owner of that 3.5 billion?
It is the scheme beneficiaries' money at the end of the day. That is what it is there for. It sits within Lincolnshire Council as the administering authority, but it's completely ring-fenced to be used to pay pensions and manage the pension fund.
But it's the council's money.
It has the Sunday name of the in which the investments are held would be something like Lincolnshire County Council as administering authority of the Lincolnshire Pension Fund within the local government pension scheme.
Yeah.
So it's a distinct legal identity or legal personality, but yeah, a distinct legal personality, but not a legal entity.
I think from my point of view, some of the questions, the question about what legal challenge can be brought this morning, I think there's a fine line, isn't there, between if the government stops to the variable bit that we talked about this morning is the employer's contribution. So the employee's contribution and the benefits are all in statute. So it's what the employers like LCC put into it is the variable bit to meet the liabilities. If the government start to dictate what you do with the investment, then there must be a point where they suddenly take responsibility for the liability.
Well, this is,
And that it's a fine line that they're treading.
And I think what they've done is they've stopped short the
right,
pension schemes bill and will stop short in the regulations of actually directing. So we have to set a local investment strategy, but it's not saying you must invest 5% in your local area. So there's a very fine line that they have not crossed at this point in time. And it's absolutely because of that. If something goes wrong,
Yeah.
if they are directing it, they therefore should be liable for any bad outcomes.
that was going to be my, so we've gone from 100% funding. If in 3 years' time, that's not quite right, but over a time frame, the funding level goes to 75% because of whatever reason. Does the employers then have to make good that? They do, don't
Yeah, I think the issue is the committee will still be setting the strategic asset allocation, which if you read anything, it says about 80% of the outcome comes down to, are you in equities or not? Are you in bonds or not? Not within equities, are you in UK or global? Are you active or passive? So not the minutiae of how is that investment actually implemented, but in just setting that high level strategic asset allocation. So the committee will still be responsible for that. I think the concern of the committee is where it might go in future. Kind of is this the thin end of the wedge? Back in 2016, we had George Osborne saying you've got to invest in UK infrastructure, which got reined back to we'd like you to invest in infrastructure. Tell us what you're going to invest, but again, stop short of setting a target. So it's whether that line gets crossed. But I think there will. One of the other questions in committee this morning was basically what's going to happen to public sector pensions because it's all unaffordable. I think the unfunded schemes are the elephant in the room is the biggest issue because we do have, and generally across the LGPS, we are over 100% funded. So we have more assets than we have liabilities. And yes, the employer pays, the employee also pays, and it reduces the future state bill in pension credit funds.
And the overall surplus in LGPS is the mechanism by which the government was able to increase the level of capital investment it's making over the next 10 years.
But I think the other thing to remember is this is not just the LGPS that they're doing it to, they're doing it in the private sector to DC schemes, pushing them into UK productive finance, which you could say are private market investments the best thing for a DC scheme. It's a lot more complex. So this is, I don't think this is we've said this and we'll leave it there. I think this is going to rumble on and there will be changes because overall public sector pensions, putting LGPS to one side, are costing the government huge amounts.
Of anything. It was just one sort of comment and then one question. So I'd like to emphasise the third bullet point in paragraph 2.5, which is about the senior officer. It's actually about the resourcing of funds and the importance of ensuring that funds are appropriately resourced and staffed. And there may well be a cost to doing that. The government, I think, rightly takes that cost is small in the context and will be paid back in the governance premium. The question is about independent governance reviews and whether the fund would consider doing one early in order to get a bit of a dry run.
Yeah, absolutely. It's something we've had on the to-do list for a while, kind of waiting to see the outcome of the good governance review and a bit of direction as to know that your governance is good. You kind of need to know what the expectations of what good governance are. So I think once we've got that further clarity, we would absolutely look to do a governance review ahead of it becoming an absolute requirement.
You happy to note the report, colleagues? Yeah, excellent. Right. TPR scores, data quality.
Right, so this is the report regarding data quality. We think this is 6 monthly. We also report this data to CPR. They're quite interested in the data across the LGPS and expect funds to at least try and attain 100%, even if they fall short. And 95% is expected to for archived or older data. Looking at the scores for Lincolnshire, the common data is 96.61%. Now, that would be data you could expect to see in any pension fund, so maybe name and address, date of birth. And the scheme-specific data, which could be something specific to LGPS like part-time hours or pensionable pay, is at 89.56%. Now, this is the report that we run and have run since I've been part of West Yorkshire Pension Fund. But we have had a couple of requests to look at the current data rather than everything that we hold on our records. So to explain that, there are some data that was recorded prior to our administration, could be decades old. It may never have had a requirement to be reported on. Although it sits on the files, it's part of the calculations and member benefits. It doesn't sit on the digital record. Therefore, those fields remain vacant and we can't report them. We have tried to access the data in those records because they would be on the digital versions of the paper file, but a reader, I think is what they call it, would be about 140,000, 150,000 pounds. So we haven't adopted that approach because we thought that's money not well spent. So we've gone away and we've looked at our own IT. Can we write reports? Can we separate the archive data from the data that you provide us and have provided us since we've been the administrator? And we've been able to do that. Initially, Lisa came up with the figures manually. So these are Lisa's figures. And then the IT came up and supported everything that Lisa has done. So that's really good. So these figures, the common data has jumped to 98.89% and scheme-specific data 98.88%. I think they're really good scores for the
No, your round number was 99% though.
Sorry,
Round number was 99%.
99%.
It's as good as you're going to get.
pretty much, because things that we discussed today about people moving address and not telling us and people not engaging to have their benefits paid means as much as we try, we will not hit 100%. I don't think the pension regulator is going to be concerned about that as long as we make those efforts. And as I said earlier, because of the dashboard, it's very likely that when we've got our new mortality and tracing agency on board, we will actually push it to 99 and a bit more percent. The figures are contained in here, and you can see that they're all pretty good individually. At least they're moving in the right way with decreasing the numbers every time, or decreasing the non-matches and increasing the match. I think the question is to the board is, do you want us to provide the current figures, or do you want us to provide full figures, or perhaps both going forward?
Colleagues.
Well, all I was going to say, sorry, so all I was going to say to you is that how, if you do all of it, if you're showing us all, how long is it going to be before you get that up to 90? You're going to be there for ever. So we're all, well, I was going to say, we're aware of what's in the past. Are we more interested in current?
Well, I think the question is the figure that you previously reported the one that meets the TPR's definition?
Well, I think you're right. I think if you set in all the information that's there, the lower figure is what meets the requirement.
So we West Yorkshire, on behalf of the Pension Fund, needs to report the lower figure because that's what meets TPR's definition. The second figure is important because what that shows us is that the data quality work that West Yorkshire are doing is having a positive impact on the quality of data. What you can't see when you look at the first figure on a regular basis, because there's this legacy stuff, you can't see that data quality work is having an impact. So from the board's, so we're caning West Yorkshire for something that they have absolutely no control over, when actually what they're doing is having a positive impact on the quality of data. So big tick, and well done, Lisa, for producing the figures manually. I'm very impressed, I have to say. So I think we'd like to see both, but I think thank you for doing that piece of work, because it does actually demonstrate that the positive impact of all the work that's going on back at the ranch. Yeah, that's good. Thanks for that. Okay, right. Where's moment to shine?
It's certainly my moment. Thank you. The report today covers the preparation of it gives an update on the annual report and the pension board annual report. The report also brings the final audit plan for 24-25. The board and KPMG will also provide an update on the audit work in the taken state. The recommendations are that the board review and approve the draft pension board annual report for 24-25, review the pension fund accounts, and note the external auditors update. Pension fund accounts were completed for the 31st of May and shared with the external auditor for them to start their work. They were then published alongside the county council accounts by the statutory deadline at the end of June, and a copy of the accounts is attached here at Appendix A. The accounts are currently being audited, and KPMG will provide an update later on in this item. The accounts have been prepared in accordance with the guidance as set out in the Code of Practice for Local Authority accounts. And the accounts set out the fund's income and expenditure for the year alongside the fund assets at the 31st of March 2025. There are also supporting notes which provide a further breakdown on these two core statements and some further information about the fund, covering such things as accounting policies, information from the actuary about funding arrangements and evaluation of future retirement benefits, related parties, and future capital commitments. As in previous year, the value of unquoted assets, so those which are harder to value, may be subject to change between the draft accounts which are presented today and the final accounts which will be published in the annual report later in the year. We monitor the movement in valuations and will update the accounts if necessary when all those valuations have been received. And any changes we'll bring back to the board so you know what they are. The fund officers are currently working on preparing the annual reports, and this will be presented to the board at the meeting in October. And the deadline for publishing this is the 1st of December, and we don't anticipate having any issues in meeting this deadline. I'll very happily take any questions on this element of the report or the fund's financial statements before handing to George and then to Rash for their respective items as part of this campaign. Just would it be easier then if Borders to Coast are just our only asset manager? Would it be easier to get those valuations from them than it is at the minute?
We had this question this morning as well, so hopefully I'm very well prepared for this. So in terms of the information, yeah, it means that we will go to one source rather than the number of managers that we get information from at the moment. It will also potentially be easier for KPMG when it comes to their audit, that they will only have to liaise with Border to Coast rather than the number of managers that we've got at the moment. I suppose at the moment with Border to Coast, we only have sort of listed assets, so those which are potentially easier to value. But when we make that move from Morgan Stanley to Border to Coast, we will have some of those harder unquoted assets. So the piece of work that KPMG currently do with Morgan Stanley will need to be done with Border to Coast. So it might be easier in terms of having one point of contact, but it doesn't necessarily remove any of the work that's either needed for us in preparing the accounts or by KPMG in auditing the accounts. I'll pass over to you, George. I don't know if you want to talk through with the board your annual board report, which will form part of the Any reports?
Circulated it to members.
It's appendix B. to the
It's appendix
papers.
B, sorry,
Yes.
lost it. Right, yes. So the board is required to produce an annual report. And part of my obligation is to produce that report on behalf of the board. So appendix B sets out that report. So it summarises the membership of the board, attendance at meetings over the year, activity undertaken in relation to knowledge and understanding, and the work that the board has done. So I don't know if members of the board have any questions on that or queries, or would like to tell me that it doesn't represent what the board's been up to over the course of the last year. Because if it doesn't, we need to amend it. I lost that in a long walk. We have to these.
I'm content, I'm happy to deal with what you've summarised in your report. Thank you.
Okay. Lovely. Thanks. Right. So it's Rash.
Yeah,
Over
thank
to you.
you, thank you, Chair. So this is our external audit plan. It communicates to you, it communicates the key things we're required to communicate to those charged with governance in terms of legislation, auditing standards, bits of ethical standards as well. We don't start an audit cycle by producing a plan. We're going to do a lot of work to kind of understand the entity, understand how transactions flow through your system. So do the walkthroughs around that, understand the wider accounting environment, how journals are important and so on, and the control environment, understand what's happening at the entity or pension fund in this case. Once we do that, we're in a position to make the key decisions we're required to do. And we start that on page 165, repeated. We've reported our materiality level, £34 million, which sounds like a lot of money because it is a lot of money. But in terms of the concept, in terms of the scheme, it's about 1%. That's typically what you get in an LGPS for materiality. If during my work I was identifying significant concerns as part of that planning work, I would potentially have a lower figure there. The same with the procedures designed to protect individual errors. That 25.5 million is 60. We set that at 65%. If I had a lot of concerns, I'd be setting that at a different level as well. So we set that at 20. We set it last year at 65%. We set it this year at 75%. The reason why we set it at a higher level this year is because actually we've got a reflection of how you operate as an organisation. We reflected on the results from last year's audits, and we're satisfied with those results. There's no significant findings in terms of control issues or in terms of issues to do with material misstatements we've identified as part of the audit process. We then start thinking about the risks and stuff. And we've set out the risks on page 167, and I think Mohammed's going to briefly take us through those risks, but at a very, very high level, so you can understand the risk and the work, and through that will flow through the progress that we've made in the audit to date. Thanks, Rob.
The page 168 of the agenda summarizes our risk of management of variety of control. You'll note that this is consistent with the prior year. This is the only significant risk that we have for the audit. This remains a significant risk as per the requirements of the auditing standard. This is because the management is in a unique position to perpetrate fraud because of their ability to manipulate accounting records and prepare fraudulent financial statements by overriding controls that otherwise appear to be operating effectively. In response to the risk, we have performed a number of procedures. The major ones are perform walkthrough of the financial reporting, evaluate selection and application of accounting policies, and perform journal testing over using our high-risk criteria. As of today, we have been able to screen the journals and are in the process of testing the journals. We have noted a controlled deficiency in the financial reporting process related to approval of journals, which is consistent with prior year. On page 169, we have risk of valuation of level 1, level 2, and level 3 assets. We have assessed this at a higher risk, which is consistent with prior year. This is because of the estimation uncertainty resulting from unobservable inputs into these investments, as well as the input of balance of the financial statements. In response to the risk, we'll be engaging our valuation specialist team for testing level 1 and level 2 investments. And for level 3 investments, we'll be obtaining an audit NAV and comparing it with the audited FS. We have been able to test most of the investments till date and have not noted any material differences. We are currently in the process of testing level 3 investments and are awaiting some NAV from some of our matters. On page 170, we have risk on investments that either not complete or do not exist or are not accurately recorded. We are of the view that there is no change in the audit risk, considering the fact that there has not been a change in recording, in the process of recording the transactions. In response to the risk, we performed the following procedures, given an understanding of the processes over the completeness, existence, and accuracy of level 1 to 3 investments, obtain direct confirmation from custodians and fund managers, bulk purchases and sales to investment manager confirmation, and recalculate the change of market value. As of now, we are in the process of our testing. We have received the confirmation from fund managers and are in the process of bulking sales and purchases and performing the calculations. On page 171, we have risk that actual position is not appropriately presented in the financial statement. The value of the actual liability is an estimate involving the selection of appropriate actual assumptions, most notably the discount rate applied by the pension fund, inflation rates, and mortality. Therefore, there is a risk that these are not appropriately disclosed in the financial statements, as these are not recognized in the financial statements, rather disclosed in the notes of financial statements. In response to the risk, we will continue to involve our actuarial specialists to review the fund's actuarial position. Our actuaries have completed their testing and have noted the liability to be within our acceptable rate. I will now pass back to Brett for the remainder of the time.
Yeah, so where we are in that, Mohammed's tried to flow in where we are in terms of the audit procedures that we're doing. We kind of in play where we want to be at this stage. We've got reviews planned during the summer months, and we'll be hoping to produce we should be producing a year-end report for officers late summer, early autumn. So that can come to the October pensions committee and board, and then go to, I think, a subsequent audit committee of the council as well. In terms of the other appendices, page 177 is the team. I mentioned this was produced back in April. Since then, Mill's gone, has left the firm. We've got a new manager who's been introduced to Claire, and he'll potentially be attending future pensions committees, depending on diaries between me and him as well. And then we talk about fees on page 178, which fees are set by PSA. There's no overruns or any extra scope work at the moment. Clearly, if issues arise or we get letters from and this is the body auditors, I'll need to respond to those, and we'll speak to officers about that. The timelines on page 79, but I've expressed our views around progress, and we confirm our independence on page 80 onwards. And there's nothing that's a particular outlier there that I need to report to you. Happy to take any questions. Thank you. Alex?
Sorry, I'm sure I picked this up at committee, but we have talked about getting a separate report for the pension separate from the county council. Is I hear right that is going to happen?
It requires a change in statute to do that, but we understand from government that statute is more likely than ever to be brought forward in the not too distant future.
It was published this morning.
Yeah, they were said they were publishing something before recess.
So the devolution bill's been published today as part of that.
That's
So yeah, I suspect for 24-25 we will proceed as we are, but that sounds positive for future years.
point about the key risk of management override of control is going to be a recurring theme, because our system doesn't have that level of workflow requirement in it. I'm not sure how you could perpetrate fraud from misquoting numbers in pension funds. It's a bit different to people in the private sector, but it absolutely could be misrepresented. But fraud to me is where an individual benefits. But
Well, yeah, from accounting perspective, it's manipulating the financial statements as well.
You could see, I don't know how the system works, but theoretically, you could transfer money between the fund and the council to massage the council's position. In a previous life, I involved in.
you see how money could be manipulated. My idea of fraud is
I know, I
benefits financially, and I'm not quite sure how you could do that with a journal, but
Yeah, I know.
that's just my view.
I
I
agree.
could understand in the private sector, if you overstate your income, there could be
Yeah.
financial benefits to doing.
I mean, presumably, Rash, I don't. The organisation I work for the rest of my time, also KPMG as an auditor, and they indicate we have the same issue. But don't think there are many systems that provide the level of control that suggests. But what we were told was we will report it in the first year and not again.
We report it in the body of the report. What we won't be doing is raising a recommendation. So we won't be raising a recommendation. What we do is we'll have to make those charge governance aware of the control deficiency here, but we won't be raising a recommendation this year.
Yes. Okay, anything else on that point? All the accountants get carried away with, then you go at the auditors. Right.
It's all done in good fun.
Yeah.
Absolutely, Rash has got a responsibility to highlight that to you. I'm just making the point that it will continue to be there as a risk.
Okay, right. So can we agree whatever the recommendation was? Is that to note, because we can't approve anything, can we?
So it's to approve your board report and then to note the external auditor's report and to review and comment on the accounts.
We happy with that, colleagues?
Yep.
Thank you. Right. The general code.
Thank you, Chairman. So this paper updates the board with the first annual review of the fund's compliance against the general code from pensions regulator. You may recall that the pensions regulator issued a new general code last year, combining all the individual codes together, updating some existing requirements and setting out the regulator's expectations in a number of new areas, including what schemes should do to comply with the legal requirements to have an effective system of governance in place. It does apply to all defined contribution schemes and defined benefit schemes, but not all of the obligations apply to every type of scheme. So we use a compliance checker that we purchased from Aon to assess how it meets those requirements. And we brought this for the first time to the board last year. The output from this year's check is attached at Appendix A. So last year with the initial compliance check, we only looked at the essential LGPS areas. Section 2 on page 186 updates the board on the progress there. This year we've looked at both the essential and the best practice areas, and section 3 sets out those outcomes. But just to summarise it, the fund is mainly compliant. It does have 2 essential actions that it needs to complete. So we need to prepare an updated scheme of delegation covering all areas. So that's across our administration and our investments. But we will do that once the final detail from pension schemes bill and the guidance there is out and known, so that we are only creating it once. We do already have investment delegations, so this is just a widening of that and bringing the new requirements. And then also the other essential action is to create a cyber security policy. We did do some initial training at the January meeting with both the committee and board last year. We'll be doing some training from the West Yorkshire side, what they do on cyber security at a future board meeting. can't remember the date off the top of my head. I think it's on an October list. And then from that, we will pull together a policy using both what LCC has as a policy, what West Yorkshire has as a policy, to bring together a fund policy. And actually, within the Lincolnshire Fund, we are not ourselves directly for holding any specific data. There's also one other action that's required of our administrator, WYPF. You'll recall last year there were some very high-level responses to all the questions as they were having a compliance check done by Aon. So that's all been updated with their responses from that check. And there's one action where they need to assess compliance of third parties, which they have a target date of 31st of August to meet. So I will happily take any questions. Thank you.
Colleagues.
Ask a question.
Yes, of course, Councillor.
Just really on the cyber policy, is that going to have to cover the pensions dashboard as well?
It will cover, so for that, because we don't actually do anything directly ourselves, we will be looking at what West Yorkshire have in theirs, because they are responsible for processing all of our data. Whilst we're data controllers, they are data processors. So I'm sure that they have looked into how that cybersecurity will be managed in putting data through to the dashboard. So yes, but as I say, we are not going to be reinventing any wheels. We will be looking at how do they do, and just bringing it into a comprehensive one policy for the fund, bringing what LCC do, what West Yorkshire do. Make sure there's no gaps anywhere.
Quite difficult to meet the regulator's requirement for a fund run within the context of a council, even that does its own administration rather than externalises it in the way Lincolnshire has with West Yorkshire. If the expectations, I give up. The expectations are set in relation to funds that exist as entities, as many private sector funds do. So it doesn't necessarily, as with many things in general code, LGPS doesn't fit the model.
And there are some areas in there where we will remain amber, will never be green, because it's things that, for example, when it's looking at diversity on the pensions committee, we have no say across the majority of the members that are put onto the pensions committee, so we can't manage that. It's through council's policies. So we will never be fully green. However, we look to not have any reds and understand any ambers.
Be happy to note progress that's been made, which is good progress. Good luck. Congratulate himself and then seek to further improve. Okay, so we move on then to the work plan and training. Ms. Claire?
It is, thank you very much. So the report brings the annual training plan for your approval, and then it's the normal opportunity for the board to discuss any training needs or provide feedback on any training that you've recently attended. And it's an opportunity to consider the future work plan for future meetings of the board. And the recommendations are asking you to approve the board training policy, share that information for events, and to look at future work plan. So sorry, I was going to say support, but it's the training policy is attached to Appendix A. It sets out the training and development requirements for members of the board, and there haven't actually been any changes to the policy from last year. The minimum mandatory training is set out at paragraph 1.3, and table 1.4 sets out the position of current board members on completion of that mandatory training. And as you would expect, with some new members of the committee, there are elements that are still to be completed, but there is a 12-month window in which to do that. An element of every board meeting is dedicated to training, so the board is asked to consider if there are any further training needs that you would like adding into the work plan, And I think Joe has just mentioned that cyber at the next meeting in October, there'll be some cyber security training for the board, but there is also an opportunity for you to build in any training requirements that you have to future meetings. And then finally, just to draw your attention to Appendix C, which is on page 275, which has the future reports and training for the board for the next 4 meetings of that you hold. And I will stop speaking and I will let you start to
Right.
consider that.
Please. Any feedback on training that we have undertaken in the last quarter? I know Dave attended the committee and board training days. So
I did attend.
feedback on that.
I mean, the only thing I've done, I keep up, I mean, I keep getting emails from Hyman saying there's something extra on Lola, so I find my way back into that system. It's often listened to in this as much as it's a video recording, but nothing else.
I signed up for the July update, so I couldn't pick up my plan. I did actually listen to the first one.
I separately from attended the BLT conference, and I encourage all of us to take up the opportunity when it comes around again next year. I don't know if Super running their pension sessions this autumn.
Seen it constantly yet, but if and when that does come through, I'll share it with you.
Again, that would be something that would be good for all members to attend. Any comments on training policy?
No, that's.
Can I just add, just for, say, the PLSA one, if you're going to go to any, is a really good one to go to. So just to give you the dates, in case that's helpful for next year. It's the 15th to 17th of June, Monday to Wednesday. It's June.
Sorry, I think I was speaking to you, George. Where is it? Bedford, did you say?
Whiteliston Lakes in Bedford.
Yes. On the A1, it's much easier to get to.
Yes.
It's not the Boston Island.
No.
Why?
They're the black cat and
All right.
Right. Okay, so we're happy with the training policy. Any comments on the work programme, as Joe has rearranged to bring policy reviews before they go to the committee in line with the previous recommendation? Anything else on that? Okay, lovely. Thank you very much. So we agree the recommendations. Thank you.
I just have one other thing. One of the other things we've done is also rearrange so the risk register comes for full review to the board for the meeting before the committee meeting.
Yes.
There was also general code
Yes.
will in future be coming to the meeting before it goes to the committee. So we've just done a bit of reline.
So that allows the board to say to the committee that they, before the committee considers something, that they've gained assurance about the arrangements that are in place. So we're sort of completing that loop so when the committee is making its decisions on things. Okay. At which point we've reached the point where we need to exclude the press and public. So thank you very much, Councillor Jabor.
Thank you for having me this afternoon. For those I have not met before, I'm the chair of the Joint Committee of Board of the Coast. And today I had a full day of pensions in Lincolnshire. I attended the committee meeting earlier and the pension board, but I found it extremely helpful. Enjoy the rest of this beautiful afternoon. Take care.
There are also there are less severe punishments for very serious criminal offences.
thank you. Very nice to meet you all. I'm sure I'll see you all again.
Thank you.
You guys vote for the
I mean,